Good morning. It's Monday, March 25th, 2024. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, in Goldfinger Capital on YouTube. A lot to get to, as always. I want to start with a little bit of a commentary on non-market topic, but just our mental health in 2024 and all the things that are thrown at us basically constantly in terms of social media, media consumption in general. Um, just using X as the platform I use the most. As an example, I cannot recall in all the years I've been on Twitter or X a time when there was so much pervasive negativity and conflict, confrontation, arguing. People are very polarized in 2024. There's a lot of polarizing things happening in the world. Palestinians and Israelis, Russians and Ukrainians, even China, Taiwan, Republicans, Democrats. Everybody is taking a position, taking a side, and then fighting against the other side. Sometimes it leads to death, like actual physical death, as in war. And sometimes it just leads to anger, rage, and bitterness. And frankly, none of it is healthy. None of it is healthy at all. And I consume some of this stuff. I'll be honest, I see it, I consume it, I read it, I get sucked in sometimes, just like, anybody else. I'm human. But then I noticed, like, Robert, what are you doing? Like, how is this consuming this nonsense, this garbage, and arguing about it helping you in any way? How is it helping anybody in any way? Right? I think the answer is pretty much always it's not. In fact, it's probably hurting us, right? So be careful what you consume out there. Your mind is precious. Your peace, your, well-being, from an emotional standpoint is very important. Your mindset matters a lot, and a positive mindset is what works. Being optimistic, being positive, looking for the good in the world. This is what makes us healthier mentally and physically, and probably attracts more abundance to us, quite frankly. If we are negative constantly and we are projecting this negativity out into the world, it's not going to attract abundance. It's not going to attract profitability from a trading standpoint. It's not going to attract money in the world in terms of jobs or opportunities. It's just not. Um, and so, yeah, just starting this video, mindset, being careful what we consume out there. This is sort of my quote of the week. Your entire life only happens in this moment. The present moment is life itself, yet people live as if the opposite were true and treat the present moment as a stepping stone to the next moment, a means to an end. Tolle, a great spiritual teacher, a guy that I've read and listened to many times, and that's true. Our life is happening in this moment, but most people are just looking for the next moment, searching for something more. But now, right now, is all there ever is. All right, so that's enough of that. Let's get into it. So just this morning, I mean, S&P is still consolidating here near 5,300. Gold up a bit, about 1% this morning, 2178.30. Looking at the industrials, the transports, we're still seeing this sort of non-confirmation. The transports not confirming the new highs in the industrials and the S&P. But frankly, right now, it's just that would be a yellow flag, and this is nothing. It's not enough to get bearish on the broader market. I mean, I'm not even really delving into the broader market in this video because I don't think it's that worthwhile. When there's something to do, when something is happening, I'll be the first one to point it out. But right now, I think the uptrend is very much intact, and market is doing a good job of consolidating and resting um, throughout this uptrend. So stocks look pretty good, generally speaking. Gold spiked above 2,200 last week. It got to 2225 on Wednesday night. And yeah, you can see this was Wednesday pre-FOMC. Then Powell spoke, had the press conference, Fed statement, dot plots still showing 3 rate cuts in 2024, and gold spiked in the future session after the stock market closed on Wednesday. So it spiked at like 7 o'clock at night, got up to 22.25, and then proceeded to pull back throughout Thursday and Friday session back to 2160. But as I said, we're back up here this morning, 2178. This graphic is fantastic. Bars and coins continue to be the drivers of physical demand for precious metals, either central banks buying tons of gold bars or private investors consuming gold bars and coins, most likely coins, unless you're a billionaire, you're probably buying bars. But look at the ETFs, right? The ETFs continue to see some outflows, the gold ETFs like the GLD. So it's physical demand that is driving gold. And I believe that is actually extremely bullish because we know that the hottest money, the fastest moving money in gold is always futures, right? Now, futures have definitely played a part in this February, March move up from low 2000s to 22.25. That money, could leave, but the consumption from physical is far outpacing the futures flows, okay, either in or out of gold. So in my mind, this is a very healthy gold rally, and the accumulation of physical gold by both central banks and private investors is bullish. A lot of this is coming from the East, China, and India. Okay, quite frankly, a lot of it is coming from the East. It's not North American driven. The number of real gold and silver investors in North America is a very small, very, very small minority. Um, let's look at silver. So, just a little bit worrying is the fact that silver was rejected again at $26 an ounce. So, this is a level that has been an important one for silver for a very long time. And just in 2023, it tested up to 26 multiple times and got rejected every single time. So now this is literally like the 5th test of this level, $26 an ounce in the last year. So will 6 times be the charm? Will 7 times be the charm? I don't know, but it feels like energy is definitely building up here. It's just not quite ripe just yet. But silver is very much in an uptrend on the weekly time frame, even the daily time frame, and it just needed a cooling off after going from 2250 to 26 and basically in virtually a straight line. Okay. Commodities remain strong. Oil, copper. We saw a little pulling back last week, no doubt about it. But overall, commodities look quite good here. Oil stocks. So here's the OIH. I mean, this thing just keeps going. I was talking about getting in on a pullback down at like 320, and we're at 335 this morning in OIH. So sometimes you just miss it, Sometimes you say, I don't want to chase that. It's up too much. It needs to cool off a little bit, and just the most bullish sectors and stocks won't give you that opportunity of a pullback. You're going to have to pay up for it. And so I missed this trade. I just missed it because my conviction in the uptrend and the timing of it was not strong enough to make me want to pay up. I was looking for a dip back to maybe 315 or 310, and it never came. So, no FOMO, no FOMO. Just let's see where I'm skipping ahead here, but yeah, here we go. No dip in oil stock. Sometimes you just simply miss the entry, and just no FOMO, wait for the next trade setup. The worst thing you can do when you miss an entry is to have the fear of missing out and then just chase it with no plan. Okay. If the setup is not there, if the risk, if the risk you're going to have to take by buying it at 335 is too high relative to the potential for further upside, you should not chase it. You need to have a plan. Never just, be impulsive like, it's going up. Other people are making money. I need to get in. That is how you lose money. That is how you make bad trades in the market. There will always be another trade. So you just always have to go back to that. There's always going to be another trade. There's a junior mining stock here this morning that's up over 100%. We're going to talk about that in a little bit. But, I wouldn't say chase it at $1 when it was at 11 cents a month and a half ago. I mean, the results are fantastic and I love the company and the project, but objectively speaking, if I have no position and it's at $1 after a 10x move, I'm probably not going to chase it because the risk I'm going to have to take is too high. There's always another opportunity. Things will set up. Okay. Things will set up again. There'll be another stock or there'll be another opportunity in this stock. And so that's my approach with OIH. Just, okay, I'm going to wait for a better setup. I might buy it at 335, but I might buy it at 335 3 weeks from now. The setup will be different and it will actually make a lot more sense than just chasing it up 8 out of 9 days in a row with an RSI 14 of 77, right? This is not an individual stock. This is a sector, right? So when the RSI gets up here for a sector, odds are it's going to consolidate. It doesn't have to drop, but at the very least, it could go sideways for a few days or a week. Okay, so let's talk copper. So I made a tweet um, last night showing this chart from Steno Research, something I subscribe to. And this really caught my eye because at first you don't really get what is this chart showing, but then you realize, okay, this is 2024 and we're only 11, 12 weeks into the year, and look at where China copper stocks are at relative to where they started the year and relative to the mean, right? The range, right? So this is a very aggressive consumption of copper by China so far in 2024. At the beginning of the year, this looked totally different. China's copper inventories were barren on January 1st, and this has been an aggressive restocking. Now, China's doing a lot of things to stimulate their economy right now. They want to increase productivity, and stockpiling copper is absolutely in line with all of their economic objectives, including producing a lot of electric vehicles. Okay. So this makes perfect sense. Will there be some cooling off? Is this going to mean revert? Probably. But does that mean copper has to drop a lot in price? No. Okay. This could mean revert back into the range and then they could continue accumulating above trend throughout the rest of the year. This is from Bloomberg. Li Chang says the economic recovery is improving since the start of the year. Growth in exports and industrial production have topped expectations. So we are seeing a bit of a rebound in China in the last couple of months. A lot of China skeptics out there. I think that China is going to have a good year in 2024. I think that commodities are positioned well to benefit from China's growth goals in 2024. And then this one from ING Research. So look at this. Copper concentrate deficit continues to grow. So we're moving into deficit here right now at the beginning of 2024. We just started to move into deficit, like literally in the last couple of weeks. And that deficit will get wider throughout Q2 and Q3. And then 25 and 2025 and 2026, the copper deficit is set to get even bigger. Okay, so more than 1 million metric ton deficit. That is a gargantuan deficit. That is a gargantuan deficit. It's like basically an entire major mining company like Freeport McMoran. It's like we need to find another entire $50 billion mining company, a copper miner, to to balance the market, and that's just not happening, right? And the next chart helps to show why that's not happening. Okay, this is from Synergy ResCap. Great graphic. I mean, I didn't even realize it was this barren, but since 2014 there's been two major discoveries. Okay, two copper discoveries since 2014. That's 10 years. You can see that almost every year back in the early 2000s, there were 8 to 10 to 15 major copper discoveries in a single year. There's only been two in the last 10 years, right? So it's this unfathomable, mind-boggling supply shortage that we're facing in copper, right? And that I'm going to harp on the same themes very often in a lot of these weekly videos because stick with what's working and what secular long-term trends. There's no reason to deviate from something as compelling as the current situation, macro situation in copper. We're facing massive deficits for years to come. The deficits will widen over the next several years. From this year to next year, the year after, we will get bigger deficits. That should be a major driver for the copper price. And then we need new discoveries. So who are the companies making new discoveries, the potential to make new discoveries? Because those potential new discoveries are going to trade, going to be valued by the market so high because there's so few of them, right? It's a scarcity of new copper discoveries, right? And that drives a lot of my portfolio selection, as you can see in these tabs. Okay, so I have American Eagle, I have VR Resources, and I have Hercules Silver, right? So all of this is copper and copper exploration, right? Copper exploration, specifically in North America, frankly. Okay. So copper itself, we've pulled back a little bit in the last week. That's completely healthy when you consider from February to March, copper went up over 50 cents a pound, right? A 50-cent move in copper is an enormous move. 50 cents per pound in copper. So from like 3.50 to $4, that's an enormous move. From $4 to 4.50, that's an enormous move. So we had an enormous move, 365 to 417 in a month. That's an enormous move. A consolidation pullback to 395 or $4 is completely healthy, par for the course. Let it consolidate for a bit more, and then those deficits start to kick in April, May, and June. I expect we will see 450 at some point later in the year, probably Q3. But remember, 50-cent move in copper is a massive move, so you can't expect that every month or even close to every month, not even quarterly. If you do 50 cents in a year, right, that's 10 to 15% in a year. That is very big move for copper. That's a bull market in copper. That gives a major tailwind to the copper mining sector. Okay, let's talk a little bit about the FOMC. I'm not really going to delve into this much because I don't really have anything groundbreaking, cutting edge to add to it. But the FOMC statement, the dot plots, and the press conference were on the dovish side. Some people thought it was very dovish. Again, Powell is not committing to a start date for rate cuts, but he is strongly hinting there will be rate cuts later this year. He's not committing to a number. But considering that we had some fairly hot inflation data in recent weeks, a lot of market observers were expecting Powell to be more hawkish in his press conference. The reality was he was not. I don't think he made a mistake. I don't think it was an accident or he said something wrong. I think he presented the situation exactly as he wanted to. And the question is why? Why does he see some hot inflation readings and an economy still very robust and still talking on the dovish side like rate cuts are coming, right? We've delved into this in past videos. I believe a lot of it has to do with fiscal dominance, that simply the Fed has to help the Treasury finance itself. I think that's a big part of it. But I also think that Powell probably has some data. He's seeing some stuff that maybe not everybody is seeing right now. Imagine what would happen if next week we got a weak non-farm payrolls report. Okay, if it missed estimates to the downside, the unemployment rate ticked up again, then how would that press conference look to market observers, right? It would make more sense. And I think that's exactly what is about to happen. I think the labor market data is about to deteriorate, and it will probably continue to for several months at the very least. This is an interesting graphic from Bloomberg, from the BLS data. So this is the state data, and the orange states are um, flashing warning signs on employment. So basically, their unemployment rates in these states are ticking up significantly. And the fact that it is now 20 states that are showing this warning sign, um, they're saying the Psalm rule. I don't know what the Psalm rule is, but it's a sign that a recession could be on the way, right? It's an early warning sign. Now, some of the biggest states in the country are Texas, Florida, Pennsylvania. They seem to still be very strong. But New York, California, Arizona, these are also pretty big states. Chicago, okay, these are big states, and they are showing their labor situation is deteriorating. So this is nationwide on the whole. Maybe things are not quite as rosy as they appear on the surface. And I've been consistent in saying that for the last few months. I expect the data to weaken. I think a lot of the data is, quite frankly, misrepresenting some things. And the data is much more of a mixed picture when you really dig into it. Yeah, just because people are employed doesn't mean that they are actually doing well financially. Are they able to save? Is their quality of life getting better? No. I think the answers to all those questions are no. Americans continue to pile up their debt, more and more debt, and the cost of living continues to squeeze even as pay um, from employment may not be, responding commensurately. Okay. So that's just my 2 cents on the whole FOMC thing. But let's go. So this is also very interesting. This is also from Steno. Look at the U.S. in black decoupling. Remember, this is American exceptionalism. What do you think? And then, like, most of the world thinks of like Americans as like a fat guy watching football at McDonald's, eating a cheeseburger and drinking a Coke and getting fatter and dumber. But look at the US economy. Okay. So, no, not all Americans are fat and dumb and eat fast food. Okay. It's not true. Stereotype is not true, although there are quite a few that are. Okay. So, can the US decouple from Europe, Japan, the UK? Like, does this make any sense? Like, Europe is big, a lot of countries, big economies. Germany, UK, France. The US is accelerating its growth while the euro is slumping into stagnate. The euro area is slumping into stagnation. This is very interesting. So, is it different this time that you can have such a strong correlation between economies for such a long period of time? And this only goes back to 2022, but you could extend this back a decade, and the correlation between the economies would be pretty tight still. Okay, um, is this possible? I would say it's possible. Yes. Is it likely to continue? I would say no. I mean, at the end of the day, especially the correlation between Europe and the US is pretty strong. Okay. Japanese as well. Um, so I'm a little skeptical that this is going to continue to um, detach from the mean. I think it's more likely to begin to mean revert later in the year. Okay. And that sort of goes into my points about Powell's press conference and what I see coming in the US economy. All right. Enough of that macro gibberish. Okay, Lululemon. All right. So this is interesting. I posted this chart to Twitter. My premium subscribers saw a trade off of this. Okay. A profitable trade, I might add, alongside profitable trade before the earnings. Okay. Back in this area. Lululemon, company who's actually the shirt I'm wearing is Lululemon. Uh, I'm a customer of the company. I think their products are fantastic. I think it's a great company. It's actually a Vancouver born company. Quite a story there in Vancouver. And so, anyway, what was it, Thursday? Thursday, they reported earnings, and the earnings and the guidance was very disappointing. Okay, so they're basically telling investors they're growing a little less than investors hope for, and the profits are going to be a little less than investors hope for. So it's nothing like terribly disappointing. I mean, I looked at it, I'm like, okay, a couple percent. But when a stock is trading at a 30 times earnings multiple or a 40 times earnings multiple, there's not much margin for error. They need to deliver. Okay. And when they miss and they guide lower, the stocks get obliterated. And investors are like, why is it down 20%? Like, it's not that bad. But you got to understand the market wants to see growth continue to accelerate, right? Growth to rise. So when growth decelerates, they just take an axe to the valuation multiples. Okay. And that's what's happened here with Lululemon. Okay. To be quite honest, I believe this will set up again for a great long trade in the next few weeks. It's not time yet because it's getting smashed down, and the expectations need to be reset much lower, and then it will be another great long. Okay, but not yet. But I want to just show that chart patterns are not a magic bullet. Okay, and I posted this because this is a very nice head and shoulders pattern, and it looked like it was breaking out above it, but I also knew it was reporting earnings after the close on Thursday, right? And so I know from experience, unless there's some edge that I have on the earnings, unless I really have some strong analysis that says the earnings are going to be great, I'm going to get flat and wait for the earnings to be reported and then reassess afterwards. It makes no sense for a trader. If you're an investor and you want to hold Lulu for 5 years, totally different ballgame. You might not even look at the earnings because you're holding for so long term. But for a trader, you need to understand that when you take the event risk of holding into an earnings report, you are opening yourself up to massive volatility that you weren't exposed to previously. So you have to be ready for a 20, 30% drop, right? And if you're a trader, that's going to destroy your P&L. I mean, if you're long LULU at 480 at the close and it opens at 400, you've just taken a massive loss. I mean, even on 100 shares, that's $8,000, right? If you're trading 100 shares in LULU, you're looking to make 500 bucks, maybe $1,000. So you cannot afford to risk 8,000 to make 500, right? So it makes no sense. Yes, it could also gap up. The earnings could be way above, way above expectations. But if that happens, you got lucky. It wasn't your analysis. It wasn't it you just happened to get lucky. One time you caught upside positive variance. But from a risk management standpoint, you can't expose yourself to that much downside variance, right? So or if you really want to give yourself the opportunity to profit from the earnings, just cut the position size way down. So if your normal size is 100 shares, hold 25 shares into the earnings, right? Same thing, if it was your position size is 400 shares, you cut it down to 100. So that if you do get unlucky, you're losing much less, okay? You can handle that variance a lot more, okay? But for me, I will almost always, 90% of the time, I'll just get flat into the earnings print and reassess afterwards. I'll trade after the report. I might even trade extended hours, but I don't want to subject myself to that gap risk. Okay. And that's just my style and what I've learned over the years. It's not worth the emotional and financial drawdown when you get unlucky. It's just not worth it. It's just not worth it. And again, if you happen to get lucky and it gaps up, again, you got lucky. You didn't know what Lulu's quarterly numbers were going to be. Heck, the VPs at the company don't even know what the numbers are going to be. So how could you possibly know, right? So you're just gambling. Um, so anyway, Lulu's done. So bearish end of the week for gold miners. But look, we're rebounding again today. For GDX, continuing a consolidation above 29 is very healthy. 29 is sort of like my major support level here. As long as it's above 29, I want to have a bullish bias. Under 29, get flat and see what happens. Agnico Eagle. So this is one of the best, if not the best, gold producers out there. And the stock has been on an absolute tear since February. Now it's consolidating at resistance. 57 is a big resistance level. It's consolidating up here. But to me, this looks very bullish. And if there's one, I shy away from owning the senior gold producers, but if there's one I have to own, gun to my head, it would be AEM, Agnico Eagle. And look at their profit metrics. So these are very impressive numbers for a gold mining company. They're way above Barrick, way above Newmont, above Kinross even, right? And the stock on a multiple basis is not price to book 1.46. This is not expensive, right? If they can continue to generate margins like this, these multiples are not expensive, okay? Um, so I like this one. Okay, I'm just going to say I like Agnico Eagle. Another one that people who have watched these videos more than a couple know I like is IAMGOLD, IAG. Okay, this one has also been consolidating for the last couple of weeks. And for me, as long as it's above 280, it's pretty bullish, in my opinion. Now, we are going, I believe this week, we will get news from IAMGOLD, IAG, right? It should be an update on their Cote Gold project. And maybe, hopefully, they're going to tell us that they just did their first gold pour at Cote Lake. So if that is true, if that happens, should be good news for the company, should be good news for the share price. If that doesn't happen, then it means something is behind schedule, and that would be not good. No bueno. Okay, but so far, I don't see anything from IAG so far this week, but I do expect, because it's the last week of March, we will get an update from them. The chart looks good. So if I just go by the chart, the price action, it's telling me that things are going okay, pretty well at Cote. So AEM and IAG, definitely two of the gold stocks I would have near the top of my list if you want gold mining exposure. Um, Juniors, a final topic. So this stock, holy smokes. ARIC, ARIC on the venture, Awale Resources. Look at this rocket ship that has taken off since February, right? This stock was 11 cents in February. 11 cents. The most recent financing price the company did was 12 cents. This morning it traded above $1. Okay, above $1. I'm gonna update. I don't know what it is this second. Okay, it's dipping back. So there's update. It's dipping back to 79, but it traded above $1. It's still up 97.5%. At 79 cents, it's still up 97.5% on the day. Okay. And it actually basically, I believe that would be a 10x from February 11 to 110. It's exactly a 10x. Okay. So this is a 10 bagger in less than 2 months in Awale Resources. So tremendous move. And you can see it hasn't taken a breath in March. It has update after update after update. So what is going on with this? Why is this thing on fire so much? Well, let's take a look at the news. So the last 3 news releases pretty much tell the tale of the story. And I don't have enough time to go into this in painstaking detail, but there is plenty of content out there on the company's YouTube channel, company presentation, company news. You can dig through it yourself. But Awale announces completion of drilling at the ODN project, February 29th. So that's a key date because the company put out this update, very comprehensive update, including a video with the CEO, Andrew Chubb. This video is what caught my attention a couple weeks ago. Okay, I watched this video and I watched it again and I was like, this is a special project. And it sounds like the drill results at BBM and Charger are going to be good. Okay. So anybody who paid attention to the company, watched the CEO video, read the news release, had an idea that the drill program went well. Okay. Then last Monday, we got this news release from BBM. 2.4 grams per ton over 75 meters at the ODNE project, and another hole 44 meters at 2.5, 40 meters at 1.9, 39 meters at 1.6. Add it all up, they had some very good results at BBM. Okay, and again, I'm not going to go into this in great detail, but the news releases the company produces with cross sections are quite thorough. Okay, a lot to chew on here. And you can see 1,300-meter strike extent at BBM. So this is not a small target, okay? It's open at depth, it's open along strike, both directions, and they've already drilled it across 1,300 meters. So this is pretty big, okay? And then you might find out that, oh, Newmont is a 15% shareholder of ARIC. And also, Newmont has an option JV on ODNE, right? So in total, and this is Ivory Coast, Cote d'Ivoire, West Africa, Ivory Coast, IOCG, favorable setting, very similar to this IOCG province in South America. And here is ODNE, right? But if you look at the entire property map, the Newmont JV properties are just here, the black highlighted, right? Awale has a whole lot more ground all around this area, right? So in total, it's like 2,462 square kilometers. More than 2/3 of that is 100% owned by Awale, okay? Um, but 2 of the 7 are under JV with Newmont. Newmont spends up to $15 million to fund all the drilling, all the exploration costs, and they can earn up to 65%. So the maximum would be 65%, and Awale still with 35% after Newmont spends $15 million, right? Um, Obviously, this morning's results are the real game changer, the blockbuster. And this is at the Charger target at ODNE. 45.7 grams per ton gold over 32 meters. In total, it's 57 meters of 26 grams per ton. Okay. And, when you see a 45-gram gold intercept in a junior miner headline, the first place I go is, okay, is there a major skew? Is there a meter of 500 grams that's skewing the rest? But look at the breakdown here of the 32 meters, and all of it is high grade. It's consistently gold mineralized with very good grades throughout. Okay. There is a few meters that is exceptionally high, but I mean, if the lower grades in the thing is 5, 8 grams, it's a hell of an intercept. Okay. Um, And so, what did they drill? Like, where did this 32 meters of bonanza grade come from? So, these are pipes, right? So, these are multiple pipes coming up from the potential target area at depth where the pipes coalesce, right? And the section maps, the diagrams really tell the story, explain it very, very well. But they are vectoring it in on the real target down here. Okay. The convergence, the coalescing of the pipes that they have drilled closer to surface. You can see that the discovery hole was hole 89. It was a very shallow drill hole that encountered 21 meters of 2.6 grams per ton gold. So, if you think the stuff that's really near surface is 2 or 3 grams, but the grades are increasing to depth and the pipe is widening. The the gold intercepts are getting wider at depth. That is both very, very, very good signs. So I'll let you dig into the news for yourself, but one of the reasons why the market is also super excited is normally with like a junior, you'll get the drill results and then you'll have to wait 4 or 5 months for the next drill program, right? There's like this downtime. Well, here's CEO Andrew Chubb. We look forward to continue drilling in 2024 with the drill rig scheduled to restart in April. Well, it's March 25th, so we're starting within a few weeks. 25,000 meter planned, the first phase of a 25,000 meters of planned drilling this year. The drilling will progress the Charger BBM scepter discoveries and will scout some prospective pipeline targets. Confidence is growing that ODNE has the potential to be a world-class mine camp in Cote d'Ivoire, Ivory Coast, West Africa, right? So you're in the right geological setting, right part of the world for a world-class gold camp, right? And the results this company is producing continue to get better and better and better. And there's no downtime, right? They're going straight right back out into the field and they're drilling 25,000 meters in 2024. And the company is not paying for it. Newmont is paying for it. Newmont's trying to earn their, majority stake in the project. So what is this worth? I don't know. I'm not even going to speculate on that. What it's worth all depends upon the subsequent results. But the trend is your friend here. The trend is very good. The results are great. And I haven't even talked about Scepter and Scepter East, right? We just talked about BBM and Charger, but actually Scepter and Scepter East are also extremely exciting. And this is a potential actually porphyry target. So this is copper gold. And I'm not going to get into it, but also very promising. Just scratch the surface here as well. Okay, so Awale, I own it. I bought it recently, right? And I'm not gonna lie to you. I took some risk off the table this morning, so I'm riding free on the rest of the position. But this is phenomenal. And best case, actually, I would like to see the stock consolidate between, let's say, 75 cents and a dollar for a week or so. And then let's see what happens when the next phase of drilling um, gets underway and see what the market really values it at. I mean, let it trade for a week or so, and we'll really see what investors, the consensus of investors is. All right. Um, so where next? Okay, American Eagle. So important thing to understand: Awale and American Eagle are both OR group companies. Okay, a lot of investors in common between the two companies. Stephen Stewart is basically the founder, chairman of OR Group. He's also the chairman of Awale, right? And OR Group has positions in American Eagle and Awale. And actually, in Awale, OR Group has 8.3 million shares, as well as 4.2 million warrants at 20 cents, right? So they participated in the 12-cent financing, 20-cent warrant. So a good day for Mr. Stewart, for the OR Group, and yeah, an American Eagle. So this is a great time for the OR Group because American Eagle is going to start drilling in May, and Awale is going to be starting to drill again in April. So it's going to be a very active summer for both companies. Very, very exciting times at the OR Group. And American Eagle, they've been quiet, but remember, they're doing IP, they're doing deeper penetrating, more powerful IP over a larger chunk of the property in April. And then drilling starts again in May at NAC. So the stock is consolidating nicely, biding its time. And the news flow is about to pick up, right? The news flow is about to pick up. And I could say the same thing, VR Resources. So VR Resources just upsized the financing, 15 cents with 20-cent warrants, upsized from 500,000 to 900,000. In combination with the sale of the Hecla Kilmer and receiving $1 million from that, um, VR is going to be very well funded for the drilling at New Boston. And the stock really isn't showing any let up here. Okay, it's trading very nicely. And that's a good sign when the financing is not big enough to stifle the stock's momentum. So 900,000, market saying that's fine, no sweat. We still want to buy this thing. We want to buy it above the financing price. Okay, so that is a very positive sign. And drilling at New Boston is gonna, I was the one who said a month ago drilling will start first week of April. Okay, and I said that based upon what I know about how these things take time. And it looks like, even though some people were thinking it was going to be March, no, first week of April. Drilling will start at New Boston first week of April. I hope to be at New Boston later in the month of April. Still have not ironed out the details there, but I hope to make a visit to Nevada. All right, see some friends there, including Chad Peters, CEO of Ridgeline Minerals, which I'm not talking about in in this episode, but Bridgeline is kind of a sleeper copper porphyry explorer play in Nevada. And then Hercules Silver, final topic. It's been quiet. It's been quiet, very quiet. And I think quiet is actually a really good thing because it's going to get a lot louder pretty soon. Okay. So, similar to American Eagle, drilling is going to start, I don't know, end of last week of April, first week of May. Don't know. The company hasn't updated that, but that's my guess. So, we're a month, maybe 5 weeks away from the start of drilling at Hercules in southwestern Idaho. Volume, look at the volume. Trailing off here. Price action is getting smaller and smaller, settling in around 90 cents before the start of drilling. But we're going to get an update from the company very soon. I don't know when. It could be this week. It could be next week. I'm going to risk putting my foot in my mouth here. I would bet we get an update on the drill program by the end of next week. That should be chock full of information to for investors to parse through, to chew on, to digest. Then we might get another update later in April, and then the commencement of drilling, and then it'll be pretty steady news flow through the end of 2024. So this is just the quiet before whatever you want to say is next. Okay, but pretty exciting drill program in Idaho. Probably one of the more exciting, more high profile drill programs of 2024 is about to get underway at Hercules. All right. So I own all these, right? Talking my book, I own all these stocks, bullish on all of them. Bullish on copper, bullish on gold. Still, we're not at nirvana yet. We're getting very close. We're getting very, very close. And just be careful what you consume out there. Just keep your mind clean, positive. Stay positive. Don't say bad things about other people. Try to be nice, be friendly, be respectful. Don't talk shit about people that you don't know, that you've never met. All right? Just be a good human being. And I hope you have a powerful trading week, and I'll see you next time.